Whoa, look at that. We are technology driven. That was the London, Ontario skyline. We're joined by Mitt and PV, and I am Jeff. Welcome back, guys. Thanks for watching our streams always. If you haven't already, make sure you guys hit the like button and subscribe to the channel. We always post these weekly. Want to be transparent on everything Foundation Capital to you guys. That was the London, Ontario skyline because we will be changing that skyline. If you've been following before, you know we've been saying this. We are developing and actively raising capital for development number 2. And we've opened it up for a couple more days to see who wants to get into the first tranche to get that 24%. You can see that ticker there at the bottom for our annualized targeted returns for our development. And tons of calls last week, fellas. I know you guys were on the phones as well too. And we got some big tickets came in investing into the development. It's exciting. It's going to be a package deal. If you're in for development 1, good on you. Development 2, package deal to the city pretty much. And we're going to be pushing the envelope for the amount of units. And the beauty, guys, the affordable units, not the luxury apartments, something a Canadian can actually afford. Isn't that right?
For sure. Yeah. Add on there. Based on what you mentioned there, Jeff, a lot of that those investors' calls coming in as we were looking to close Development Fund 2.
Long weekend.
One thing was, how are you guys going to get 432 units rented up so that we can successfully sell and exit the building? And the answer, guys, is that we're servicing core workforce housing. The rents for this building are going to range between $1,500 on the affordable side and $980 per month on the deeply affordable side. So significantly below where market rents are right now at $1,800. And if rents continue to grow by the time construction is completed, that gap is going to further increase. So we anticipate there being a waiting list of tenants trying to get in at these affordable rates for where we have underwritten this deal. And again, unlike condos, we don't have to sell the end units. We have to get the building leased up, and then we'll sell it over to a buyer as that net operating income is going to drive its value.
That was a question I got from an investor on the weekend. 1,000. Let's say we get 1,000 units, like 500 and 500, roughly from what we get approved. How will London absorb 1,000 new units on the market? Was a question that he had. And what's the population doing? The employment magnets for London, Ontario. Why can London absorb 1,000 new apartments, if not more?
For sure. And the answer is supply and demand. We're already in a housing shortage for core workforce housing. The people we're building this for make between 50 to 75K a year in income. The deeply affordable ones even lower. So there's already a housing shortage. When you see those headlines about there being a housing surplus or condos sitting vacant, you got to remember those are the luxury types of products, the things that were built to be super nice condos and get top of market rents. That's not the marketplace we're servicing. And you guys can even speak to the waiting list for community housing available in these cities as well.
Yeah, for sure. I think we've been talking with a number of different not-for-profit organizations. As you guys know, we launched the Affordable Housing Fund in parallel to the development projects, where we're getting involved with the community, obviously as landlords in the area and providing housing to people. We've known that there's been such a gap in wage growth and income versus what's being charged in the market. And so when you look at ODSP, you're only on a monthly basis at maximum getting $1,400 a month. And then you're going to get a rent supplement potentially from the federal or county level. And so there's really a gap in what's available from a supply side perspective. What we're doing with our developments is we're collaborating with the city, with some of these non-for-profit organizations to take people off their wait list to help and service them. And so we're getting in touch with those folks, and you'll see some more news about that from us, announcing some memorandums of understanding and partnerships where in the different cities that we're operating in, we are going to continue to create these affordable and accessible units, helping adults who need that supportive housing while still being able to generate a return for our investors. And so the great part is there's a lot of government programs and funding available that we're able to leverage to de-risk the projects and create permanent affordable units for these folks. So we're collaborating on a city level, along with a provincial and federal level. So some exciting stuff for some of these projects that we haven't kind of factored in already. We've only gone with the baseline of 10% of the units are going to be affordable. With the launch of our affordable housing fund and some of the other initiatives we take, we're really hoping to put a significant dent in solving the affordable housing problem that we have. It doesn't matter about you're building more housing generally available. It's not going to drive a solution for the people who need it the most. And that's what we're looking to do. I think our years of experience just dealing with folks and understanding their real pain points has really brought us to the solution, right? Where we know that they've got wait lists on wait lists, like thousands and thousands of people waiting.
If more than 1,000.
Sorry?
In London, Ontario, more than 1,000 people.
Oh, we're at over 10,000. So if we had those units available, the people would take it right away. But guess what? Everyone's going to compete. And what's going to happen, as we've all seen, is the wage growths aren't keeping up. So people are starting to look to downsize. The house that they own is their predominant asset. They're getting to more retirement age. They're going to have to pay for their cost of living. They're going to sell their home. And where are they going to go? They're going to have to rent a place.
And I think our thesis has always been this won't be somebody's forever apartment as well. Maybe they're starting off in their 20s and it gets them out of their parents' house, as an example, right? So it's maybe 1 to 5 year kind of person, and we're not rent controlled, and it'll continue to go up in time. So that's kind of our thesis here. And yeah, we're just excited that we're going to be able to provide these apartments. And clearly 1,000 units going to the market is something that the market can absorb, and it needs more and more. And that's we're eventually going to be doing development 3, 4, 5, 6, 7, 8, 9, 10 as well too, guys. So this is only the beginning stages. One little YouTube bonus thing above Mitt's head, you can see a QR code right there. New thing we're trying out right now. If you're watching on your desktop, you can take a screenshot of that there, and it'll send you over to Equivesto for our private real estate trust. So we do have the private real estate trust where you get cash flow and distributions if you qualify. And then we have the development, which will compound over time, and you'll receive those returns when the building's built, and we rent it out. Exactly what we're talking about right now. It's all rented out. We sell it to either the trust or to the market, and you as the investor get your gains.
Awesome. So I guess, guys, there's been a bunch of stuff going on in the world. I know we talk about it each and every week, but we saw inflation pop up to 2.8% in April for Canada. Obviously, we've been having investor calls across the board, both from the REIT perspective and on our development side. What's kind of the sentiment you're hearing back from investors and potential investors?
Yeah, I think a lot of the ones that were coming for the development fund have a long-term outlook, and they are very bullish on Canadian real estate, just given the thesis in general that the supply is not keeping up with demand. So, it hasn't been bothering the development fund oriented investors too much. Some of the ones who have been interested in FCP REIT have been asking, what's our thoughts or what's our outlook? But I think a lot of investors understand that real estate is a long-term game, and these headwinds will blow over in the short term.
Just goes back to, we provide a product that's affordable to the public to rent versus going after luxury. So no matter what's going on in the world, we still have shelter for Canadians in Southwestern Ontario that need it at an affordable price. So that's kind of how I talk to the investors and give them peace of mind there. It's all about the peace of mind. Yeah.
Yeah. And so I guess not a lot of people bothering you about investing in condos and single family homes at the moment.
No, my phone is not ringing off the hook to buy a condo right now. Yeah. They're making sure that we are not condo developing. That's for sure.
Exactly.
But exciting news that PV and I shared from the public news. That Montreal-based firm buying up a whole condo building in Toronto, but switching it over to rentals, probably for the short term or medium term. But they know that they can acquire a crap ton of apartments, so to speak, that are condoized, rent them out just to the people, and then from there they could piece them off in the future. But right now they know people need shelter. We're going to buy this, and they saw that opportunity. I'm not sure if there was like some half shares, half cash there sort of thing. I review that, but it's just, yeah, people are getting creative with how they're purchasing, and they know they need to acquire the asset right now during this, housing shortage.
I feel like we've said a lot in our newsletters and on camera, like this is purpose-built rental. But I went to a dinner last week as well, where the guy's like, "So you're doing a condo, right?" And I'm like, "No, we're doing a purpose-built apartment building where everyone's going to be renting it to one owner of the entire building completely."
Remember our first stream, and somebody couldn't figure that out. We were like, "We are not. People buy a building. People, this happens all the time, like in Manhattan and Toronto and London. We're not selling the condo. We're not selling the apartments." Yeah.
Yeah. It's no, I think once that gap gets bridged for them, that it's not a condo, but also that the exit is going to be you lease up the building and then sell it to a buyer versus piecing off the individual units like a condo. It clicks to them. They're like, "Oh, okay, I don't need to worry about the condo market being in the gutter right now. This thing just needs to be rented," and that's what guarantees.
We'll sell it to Jesta, the Montreal firm. So see if they want to buy it at the very end.
There's plenty of firms out there right now that have raised capital to buy purpose-built assets like this. I think, if you look at all the ones who've raised funds with pension plans, they deploy capital on a 30-year plus time horizon. So what happens is for a lot of people who, if you have a pension, your insurance company or provider has to invest in things that are going to provide cash flow to basically pay for your pension benefits. The money doesn't come from nowhere. They're not sitting on all this cash just waiting to pay your pension out throughout the time. What insurance companies do is they invest that money. They invest that money, and anything in excess of what they pay you, they get to keep. That's the whole point of how insurance companies make so much money, is they're leveraging your assets while they're paying you a certain proportion of that. So if you're a large pension plan and you're seeing that in Canada, the population is continuing to, let's call it, age out, retire, there's no, the workforce is aging out, but there's a shortage of housing coming on, for them, it makes sense for them to invest in local Canadian real estate, where, again, most of the money that these people are going to get from their pension is going to go towards to cover it. Some of these people will sell their houses off, so they're going to be paying for housing, whether that's through like nursing homes or through an apartment rental or a senior living residence. They're going to be paying it towards housing. So pension plans look for that long-term asset. They're okay to collect that yield, that monthly rent minus their expenses, because that gives them the money to pay out to their underlying pensioners. So it's pretty cool. Obviously, a lot of them have been rebalancing. People are living longer and things like that. So you'll see assets trade in the market. I think we've seen quite a bit of that as well. We're obviously in the market looking at existing buildings for our REIT as well, trying to see what can make sense. So if you have a portfolio of apartment buildings and you're interested, please reach out to us and Jeff if you have buildings for sale. But otherwise, I think we've got plenty of buyers, whether it's the local insurance companies and pension plans that are looking for those assets. But I think we're going to start seeing some more international players coming in soon with some of the European ex-Canadian trade relations significantly improving in the last little bit.
Cool. Sweet.
Yeah.
Well, guys, people watching, you know what to do. Make sure to reach out to us if you haven't already. We're on Instagram every single day at our individual tags. Oh, might hit the mic there. And then also at Foundation Capital. Plus, we're on X. We were on the newsletter, which many investors have talked about how simplistic and nice that newsletter is. So they're getting a lot of props about that newsletter. So hopefully you guys are maybe even watching this from the newsletter. And subscribe to this YouTube channel. And if you're interested in investing in the private real estate trust or in the development, reach out to us, or got the QR code above Mitt's head there. Thank you guys for watching. We'll see you guys on our next video. Bye.
Thanks,